Hey traders, this is Ron Haydat, Market Tamer. Happy Tuesday. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. The markets were mixed today. The Dow was down via the diamonds about 20 cents, not very much, while the Qs finished up about 0.5%, closing the day right near those all-time highs. So again, bulls have the edge going into this week. Now, in terms of stocks that have earnings this week, and in fact, Bed Bath & Beyond and Delta both have earnings tomorrow. I received a couple questions on what protected puts could look like. Now, with these companies reporting in the morning, we'll just want to jot down those prices tonight as we look at the options chain. Now, using Bed Bath & Beyond, it's only an $11 stock, but just look at the gaps. Down, 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 finally an up, and then a down, and then it really went down. Maybe the next one is zero, I don't know. But even on $11 stock, here's what I would consider doing. If I come in here and do BBBY, which is Bed Bath & Beyond, I usually look to 45 to 90 days in time, 45 to 60 days in time. That's really nothing more than 90 is typically needed. There's nothing to pick from. It's either 38 or 129. In this case, I'll go August. The stock's 11.44. If I buy this $11 put, if the stock went to zero, it would allow me to still sell my shares at $11. I could exercise my long put, and then I'm only out what I paid. In that sense, these can really be valuable. Now, we don't know if BBBY is going to go to zero or go to $1 million tomorrow. We have no idea. But here's the thing. If I take you back and I show you a stock that goes from 18 to 15, right? 20 to below 17, 25 down to 22, and then all the way down to 18 or so. There can be a lot of capital lost here. So even an $11 stock could be worth it. So if I were to write down 86 cents as a debit, and this stock, let's say, drops $5, it gets killed, tomorrow, I could go to the $16 strike and say, hey, it's going to be worth $3.20. So I paid 86 cents. It's now worth $3.25. But look, $3.25 by $4.85. There's a big bid-ask spread here. Maybe that gets up closer towards $4. And then if the stock were to drop $5, we'd be looking at, hey, you paid 86 cents. Maybe it's worth $4. It's up about $3 and change. It's better than losing all the value. Now, this particular example, the bid-ask spreads are really, really wild because the market is now closed. But once they open up tomorrow, you'll see a much tighter spread. So I can just jot this down and then we'll see what happens. If the stock doesn't move at all, that 86 cents will get crushed, but at least it's only 86 cents, right? And if the stock rips higher, well, this could go to zero, but then the stock is gaining, penny for penny that I have the chance to make on that. All right, next, let's take a look at Delta. And I got to be careful I don't go too granular or these videos are going to turn into, half-hour events, which I really don't want to do. So here's Delta Airlines. They're also due to report, according to Thinkorswim, tomorrow morning, BMO, before market open. There's been some movement before on earnings. Not a ton, but sometimes there is. This could be one where the stock goes from here to here, right? Or it could go from here as high as it wants. If I was protecting capital, what I would consider doing is going out 45, 60, 90 at the most, and I see there is a September option. If I go right at the money, it would be strike 60, with the stock being basically at $59. I'd pay $3.15. If this stock, let's say, drops $10 over the next couple days, that $60 put would be worth what the 70 is now, which is about $11. So if I round this off and say, hey, I paid 3, it's worth 11, ballpark, what are we up? Plus 8. Stock drops 10, put option gains 8. Better than a sharp stick in the eye. If the stock goes nowhere after earnings, this option will get killed, might lose half its value in a day or two because the implied volatility, the unknown, is now gone. If the stock jumps higher, let's say it pops 5 or $10, well, the most I can lose is what I paid for the long put, but now my stock is appreciating dollar for dollar. So again, good practice, just do BBBY and Delta just for fun. We can see how it works. And then as we get into earnings season next week and the week after, we're going to have some examples that we can use by using Think Back Inside Thinkorswim and say, hey, this was the price yesterday. Look at what it's worth now. And you guys know, if you watch the videos, I do this about once a quarter during earnings season. And here we are. We're going to have another chance to see the value of these puts. All right, how about Pepsi? Now, they had earnings this morning, and they're down a little bit. Since Pepsi rallied with the whole market here in January, late January and February, it's used the red line really, really well. Only a couple times did it dip below it, and that's the 20-day EMA. But the orange never got even close to it, right? With this down move today, if we get below the orange line, which is the 50-day institutional moving average, that's the big one. We get below there, that would end this nice bullish run, and I would begin to shifting to bearish or at least neutral strategies. No more short-term bullish. In fact, we get below the orange line. I don't even think about bear calls up there at 135 or so. Oh, by the way, here's HELE Troy, HELE. If I pop this little window out, you can see as of this video, it's about 4:55 p.m. Eastern. The stock closed at 130.167, and now it's bid up there between 141, 142. If I zoom in and get rid of this, it's being bid right here. What needs to happen is a breakout above 145. If that happens, we could even say this is a cup and handle type formation, but that would bust out of that double top. And if I bring all the data in HELE Troy in, this is going to be all-time highs. This is a big deal. So where would I get really interested in HELE Troy? Above 145 on a closing basis. As of right now, it's at 141. It's just in the middle of all this chop. Now, AAOI, I came across this one. It's interesting in the sense that the stock was at 45, now it's at 10. But look at the volume. Similar to some of the other stocks we've looked at recently. It gapped up, closed above the 50-day on June 27th. We came right back down, light volume last couple days, filled the gap. Today, launched higher on 2.8 million shares. The difference between today and back here on the 27th, we closed near the highs of the day and volume is even bigger. So if I wanted to be bullish on this type of stock or this stock, I would consider the red line right now because it's so close to where the stock is as an end of day trailing stop. And here is BJ, which is BJ Wholesale Club, sorry. Daily chart. If we get below 24, there was a little spike down here, March 8th. We had some lows just above that here in June, and then today's intraday low is pretty much right on 24. We close below 24, then you're looking at the double bottom at 20. That's $4 lower, almost 20% lower would be the target. So heads up here on BJ. So that is it, folks. Wish you guys all the best. I hope those protective put comments were helpful. Practice on paper, as always. And if you have any questions, just let me know. All the best.